everyone, I'm Bon, and this is my first daily edition, Tax Basics. So in this daily edition, I'm going to cover some tax basics. Firstly, I'm going to cover the income rate schedule, the deduction on taxes, what taxes are, and how the government uses taxes to provide services to its citizens. Let's first introduce ourselves to what is tax. So a tax based on your income, your daily living, and your assets or possessions, tax can be different for many people. Simplifying, it means that it is a certain amount of money that you get from your income, for example, 10% or 5% that you pay to the government. So, second part, how does the government use this money? Do they just do it to gain profit? Actually, no, because the government uses this money given by citizens to provide public or general health care, like police, firefighters, or hospitals, and even publish them in rules and regulations so that there's a punishment for tax evasion. The money on taxes can also be used to build town halls, elect new leaders, provide more quality supplies and food to schools, etc. Firstly, let's look at the income rate schedule of the USA specifically, or United States of America. So, as everyone can see here, this is a person called Bill, and he will be helping us explain this map. So Bill, he's here. He earns $100,000 per year. So here are the taxes he might have to pay, starting at $8,000. That is 10% and increasing to 28%. So how did I figure out these numbers? As we can see, the tax for the first month, firstly we can see that we need to take this number and multiply it by the percentage on the right. However, with the last number, there's actually no other number that goes forward. So we will have to take 100,000 directly to minus $89,300. That gives us $17,750 multiplied by 28%, $48,300 multiplied by 25%, $25,600 multiplied by 15%, and $8,350 multiplied by 10%. All of these account to $21,720 total in tax for Bill, which is around 25 or 23% of his income. Next, I want to talk about deduction. So most people would think that deduction is just like setting up a giant company so that you can evade taxes by splitting your money into so many little pieces that the government easily tax you $1. Well, that is not quite true because tax is based on how much income you get. For example, if Bill by mere chance gets $1 million, this amount would increase. However, if his income in reported paper was only $50,000, he would get a lower number than this. Let's say that, for the sake of this presentation, that Bill only reports that in his report card only $90,000 instead of $100,000. This is legal because in some parts of the law, some of the money you can keep for yourself is why deduction is here. So in this case, with only $90,000, all of these numbers decrease at a certain rate, and the total tax amount is only $18,000, around $19,000. As you can see, I rounded up. So I noticed that there's only a 3,000 or 4,000 gap between these two, but that is only because of tax deduction. You see, tax deduction not always gives you the amount of tax deduction you want. Even if you only reported $100,000 out of your $200,000 income, it wouldn't give Bill here exactly the $100,000 tax reduction rate he wanted. So, in conclusion, an income rate schedule is really important to calculating taxes, remembering how much you're supposed to pay, and regulating by rules under the Fifth Amendment, whatever that is in the law. We can also learn about the deductions which legally happen with some rule of the law, especially in the US. There have been many cases of people like Bill here financing their taxes properly and getting a proper tax deduction. This can bring many financial benefits in the long term and benefit people in the short term. So that is all for my first daily edition. Thank you for listening. Hope you learned a lot from tax basics, income rate schedule, deduction, and whatever this guy has to say. And thank you for listening. Bye!